Of course, we get those Japan CPI numbers this Friday, and the expectation is that they will still be above that 2% target. But how much real demand-driven price gains are you seeing in that economy?
Look, you're putting your finger on the pulse. There is very, very little evidence of demand pull inflation. And that's what makes Japan different on the global scene. Yes, cost pressures are rising with energy prices, food prices, and component prices going up and the yen weakening. But, unlike the United States in particular, there just is no surge in demand here. In fact, the economy is still just about 3 percentage points below the pre-pandemic level. In the US, for example, it's about 8% above. So we've got a very, very different picture and no signs of demand pull inflation.
But Jesper, we are seeing, of course, global central banks moving, especially with the Fed 75 basis points hike. And then we had the BOE, the S&P. How much pressure is the BOJ under? And will they eventually have to follow what the Fed does?
Look, the beauty and the raison d'etre, the reason for why we have the current global financial system is that it allows, in fact, it demands policy independence. You have to do what is right for your country. And Governor Kuroda is one of the most experienced and one of the most well-studied and well-read people. And his view is that no, Japan is not yet ready. And quite the contrary, he wants to succeed where everybody else before him failed, which is to actually pull Japan out of the more than 1 generation long deflation trap.
Yes, but where to then for the yen? Because you're saying that the same dynamics, we keep talking about this widening gap, and that's only going to get wider. Does that drive significant further yen weakness, or do you think we've reached a level of tolerance?
Look, I don't think, look, for all intents and purposes, as a practitioner, as an investor, the two forces that got us from 110, 115 to the 130, 135 range are still in place. We've got a widening interest rate differential. Again, the Federal Reserve making it very clear that they will continue to accelerate rate hikes. And then, of course, you've got Japan's trade and current account, which continues to deteriorate. Both of those forces are likely to stay in place. So as far as I'm concerned, we're in for further yen depreciation towards 150, 160.
Yes, but what change do you think Japan at this point, given that we do have some level of inflationary pressure, what change does Japan need most at the moment?
Look, I think Governor Kuroda tells you exactly what you need to look for. He wants to see demand pull inflation. And it's actually quite simple. If you do the analysis, there's a deflation gap of around 15 trillion yen of consumer spending. And if you look at the gap in domestic tourism, Japanese by themselves traveling within Japan, that gap relative to the pre-COVID level is about 15 trillion yen. So I am watching like a hawk any data point on domestic travel. If that starts to recover and accelerate, then yes, the Bank of Japan will change its mind.